Hello and welcome to the Decrypting Crypto podcast. It's May 15th, 2025, and this is Off-Chain, your weekly recap of the biggest stories in the crypto space. I'm Matthew Howells-Barby, and I'm here as always with Austin Knight. How you doing, Austin?
Oh, man, we almost hit an all-time high. I'm doing pretty well.
So close. ETH has risen from the ashes. My child. It's been beautiful to see. I just have this nagging feeling that we're going to get rug pulled with something anytime soon. Such is the volatility we live in right now. But why don't we start there, because we've got a bunch of different things going on. There's some really interesting news and some big milestones happening in the crypto space. But we can't go through this episode without mentioning the market rally. And I don't know about you, Austin, but I think the thing that's been most exciting about this is that really altcoins have been leading the charge, at least in this week. We've seen most of the time where we've had these like brief moments of good news that we've talked about previously, like, the after the initial Canada and Mexico tariffs, and we saw like Bitcoin rallying back, but everything else kind of meandering around a little bit. This time has been different. I mean, Bitcoin has rallied. It's been great. I think we pushed up to about 105K. I thought over the weekend we were going to see an all-time high, but we just missed out on that. But the market clearly liked the China and US, I guess, talks and potential agreement, right, that they've kind of came to on Monday. It seems like at least the past few days they've been trading shots across different things around, the chip side of things, the deal they did with the UK. So it still feels a little bit precarious, but at least for now, we are in a brief reprieve. And as far as I'm aware, I think we've got a little bit less than 90 days where the US and China have agreed to put some of the tariffs to one side until a formal agreement's put together.
Yeah, it's a step in the right direction, right? And markets went on a rip for a little bit there.
Yeah, well, I think that it compounded, right? Because we had CPI data come out on Tuesday, softer than expected, which was a surprise, to be honest. And albeit, oil and energy was driving that down, but even core inflation, I think, was just slightly, marginally under expectation, which again was a hugely bullish kind of print. So I think like that's been pretty positive, because the takeaway from that is, well, okay, some of the tariff stuff is chilling across all fronts, it feels. Trump has been willing to backtrack on a fair amount of this, and I think we're going to continue to see that. And now inflation, at least some of this early signal, which I don't think we should read in too much, is looking not quite as bad as we thought. Maybe this gives some breathing space for the Fed to come in and start reducing rates, which would be the real boost, I think, for assets like crypto. Look at the past week. ETH is up over 30%, over 50% in the past month. This is a meme coin-esque growth curve for ETH. Memes have been getting a big leg up too. Looking at just some of the big ones, like MOG was up 61%, Pepe up 50% in just the past 2 weeks. Even Doge and Shiv up over 25%. So another big one. And then if we shift our focus over to the stock market, I mean, that's where the real ripping has been happening, to be completely honest. The NASDAQ, the whole index moving back up into bull market territory, up 14% in just the past 30 days. That is unbelievable for an index of that size. S&P up 10% at the same period. We've now pared back all of the losses from since the start of 2025. It's remarkable, really, to where we've came to. And while I am very cautious around getting optimistic in any way, it feels like the worst is out of the way for sure.
Yeah, I think that's correct, and it is nice to see those new inflation numbers. Hitting a 4-year low. It dropped 2.3% in April. That's the lowest since February of 2021. So that's nice, but we gotta hang tight a little bit here to see if there are going to be trade disruptions or any cost pass-throughs to consumers. Obviously, that could still potentially impact inflation. I think GDP contracted slightly as well in the latest numbers, but that's primarily due to a significant increase in imports, just offsetting that. So
exactly.
Yeah.
I think we've got CPI coming in as well, either later today or tomorrow, which will be another measure. Maybe even by the time the podcast goes out, we'll have had CPI come in. I think the interesting thing for like CPI and PPI is like these inflation readings were kind of a free hit, because if they came in hot, it was going to be, this is to be expected from the whiplash of some of the tariffs. It's transitory. Mm-hmm. And if they came in under, people would be like, all right, this is great. So I think like we shouldn't get too excited about inflation. And we have certainly been punished over the past kind of year for ever getting too excited about inflation. So that's where I'm most cautious, to be completely honest. But talking about the S&P 500, here is what I would say is one of the bigger milestones for crypto, is that Coinbase moved into the S&P 500 index. They replaced Discover Financial, which was, of course, recently acquired by Capital One. They're the first company that is a crypto company to enter this index. Obviously, pretty good news for Coinbase shareholders. I mean, Tuesday alone, the stock price was up 20% on the day. So that's pretty good for anyone holding coin. But being part of an index that size, you are just going to see so much more liquidity and volume on trading on your stock. But I think more than anything is a big boost to crypto from a legitimacy perspective. So it's good to see, despite me being and my allegiance being at Kraken, I'm happy to see this. I am happy to see it. So that's a good one. The only other thing that I was looking at this week, which I thought was kind of interesting, because there's been quite a lot of announcements coming out in the world of DeFi and other areas, is and I think mainly because people have had some of these projects have had loads of announcements ready to go and things to launch, and they're waiting for momentum. Certainly seen this from a lot of the DeFi projects that I follow. But Phantom, the obviously extremely popular, primarily Solana wallet, but I know they're multi-chain, with their, what was it in Jan, 15 million active users. They're entering the LST market, so the liquid staking token market. They've just announced that they're launching PSOL. So they've got a pretty simple one-click staking product in their wallet. I'm not sure on all the geos, though, that's going to be allowed in, because I think that they are only offering this into geos where they're somewhat compliant from a staking perspective. But no doubt they'll be aggressively pushing this to their users. Why is this even of note? Well, if you're not super familiar with liquid staking tokens, this is effectively like a tokenized yield-bearing asset. It's a way to own SOL while benefiting from staking yield without having to, spin up a validator yourself, which I know isn't even really possible for most people on Solana in particular. So this is where you can gain exposure and have staking rewards come in by just simply holding the PSOL token versus Sol. This space, which for the longest time was dominated by Marinade, which is MSOL, their product, kind of was completely upended, I think, last year with Jito, with JSOL, which now has a 40% share of the market. Marinade is a close second. Well, depends how you would define 23% versus 40% being close, relatively close second. And then I think the next biggest one is 10%. And from there, you get down into real low numbers. I am going to go out on a whim here and say that within 12 months, Phantom will be the number one liquid staking token on Solana. I just think that user base that they're going to be able to tap into, especially if we start to see a meme coin season happen again, which you just know it's going to happen at some point this year, we'll see all of those Solana holders probably just do a logical thing where they see like, hey, and up to 4 or 5%, whatever they pass on, maybe even more if they juice up incentives in the short term, people are going to start staking with them. For Phantom, makes complete sense because they earn a slice of that revenue from their users. A great way for them to continue to monetize. I'm a big fan of Phantom. I think it's an awesome product.
Yeah, exciting times. I love seeing what the market's been doing the last couple days. It looks like as of just early this morning, there might be a little bit of a correction happening.
I saw some of the. I mean, it doesn't surprise me. We saw, what was it? Wednesday morning, crypto had like a little bit of a pullback, and then we started a slow grind up again. We had a few liquidations happen. I think, this is like a lot of the fast money's back, and it's probably not the stickiest. And certainly what seemed to happen on Tuesday was I think everyone was going 10x long everything at that point, and we saw a few big liquidations wipe some leverage out. Not always a bad thing. It seems I was just looking at the stock market, at least on the US equity side. Generally, I didn't see what the S&P's at right now.
S&P's down just a little, I think.
Okay, maybe it's going to be more. NASDAQ is going to be 60 bips. It's down, not enormous amount. Some of the stocks I've been tracking that are more akin to people's appetite for investing, right? The likes of Robinhood and co. Yeah, Robinhood, Coinbase, they're all down 4 or 5%. So I think they're getting punished disproportionately here. I just think, after the big leg up in the current conditions, it doesn't surprise me that we see a bit of volatility. I expect this coming into the end of the week. We've seen news really changes the market at the moment. So
very sentiment driven.
100%.
Well, speaking of sentiment, how about some pro crypto sentiment? We've got a new SEC chair, and that is Paul Atkins. He was a George W. Bush era commissioner, and he has been appointed as the SEC chair, and he's already signaling a pro-crypto shift. In fact, he announced that the agency plans to create some new rules for crypto tokens rather than rely on enforcement actions, which, of course, we all know. Oh, man. This definitely was expected. This aligns with the Trump administration's sort of deregulatory pro-crypto stance. And what they're trying to do here is clarify how digital assets, which would include crypto, can fit under existing security laws. So they're considering rulemaking for crypto assets to provide some legal clarity, especially for non-security tokens like Bitcoin and Ethereum. And I think that their aim here is that they want to get to a point where they can allow licensed platforms to really confidently trade these tokens, which as of today are in a pretty big regulatory gray zone. We
I
all
think it's really
remember
hard
that.
for most companies, like whether you're at the like very early stage or slightly more mature end of the spectrum in this, like making investments in growth is incredibly tough. It's been incredible to see, like even the the end of last year, most of the crypto companies that I spoke with, they'd been focused really aggressively on moving most of their workforce out of the US. Barely any of their exec
Mhm.
teams would be in the US. And chat to companies today in crypto, and it's the opposite. And it's same with like geo expansion, making big investments in growing their teams because they're like, okay, we feel like clarity's coming, we can actually commit to stuff. Same problem I
Yeah.
think that you see in the chip making space in a very different flavor, right?
Yeah, I mean, we talked about it at great length on this podcast. Gary Gensler's legacy, I think, is regulation through enforcement, which is uh, it's tough to plan anything ahead as a crypto exchange or crypto adjacent company, even when you're constantly in fear of the SEC coming after you over a rule or a law that they never really even communicated exists.
Mm.
So, companies like Coinbase made huge efforts over the last few years to say, hey, we want to be compliant. Just tell us what we need to comply with. And even if that is in opposition to the growth of crypto in the US, we still want to be compliant with that. Now, what you have is kind of like a total shift away from that, which is we're going to tell you exactly how to be compliant, and it's going to be totally oriented toward growth of this space in the US. We want to onshore crypto to the US. So I think that this could really, as you said, Matt, bring those jobs back, revive some domestic innovation in crypto and DeFi and tokenized assets that had moved offshore due to the hostility of the SEC and the US government over the prior 4 years. And this could potentially create some second order effects. Like it could give some political cover for Congress to pass more permanent crypto legislation as well. So
Yep.
I think that the SEC, like, they're not just tweaking their guidance here, they're actually reversing their posture. And if the rules that come out of this are coherent, which that is an if, I guess,
Yeah.
it could unlock billions of dollars in sideline capital, especially for infrastructure projects like tokenized securities and stablecoins. I bet that we would see a real
Yeah.
rush of U.S.
I,
firms re-onshoring
well, I
if
don't know
this
if you
holds.
saw. I don't know if you saw. I think it was yesterday. J.P. Morgan. I think they were the first major like U.S. financial institution to settle a U.S. treasury, a tokenized treasury transaction on a public blockchain. Um, I think they did it on Ethereum. Mm, I think it was Ethereum, but that wouldn't have happened under the Gensler
Yeah.
administration. Absolutely not. So even already, we're starting to see the openness to this happening.
Yeah. Speaking of stable coins and reinvestment in the space, Meta is revisiting their stable coins for creator payments. They are reportedly exploring support for stable coins like USDC and USDT in Facebook and WhatsApp. And the focus here is on allowing content creators to receive crypto payments, basically. So this would revive parts of their abandoned Diem vision. You remember that, Matt? Diem slash
I
Libra. Uh,
remember I remember it very well. I mean, we talked at great length about that. It's part of
yeah,
like Libra and everything else that they did, right? Back
yeah.
in what would that have been? 2022, something like that. We were chatting
Oh
about it.
gosh, the
Not
the
2022,
I
sorry,
think
2018. 2018.
yes, that's when the
Yeah.
hype started.
Yeah.
So actually, like I remember in 2019, Meta like formally proposed Libra as a global digital currency that would be backed by remember this, a basket of fiat currencies. There was like this
Yes, I remember
new sort of
very
idea,
well.
like we're
Well, I
gonna
remember
have
when we did the episode with like MasterCard or Visa was joining the consortium. That would have been, we must have recorded that in 2018, 2019, something like that, right?
Yes, exactly. So the idea was that there would be this Libra association, which was based in Switzerland. It was a consortium that would include like big players like Visa, MasterCard, Uber, and others.
Uber.
And Libra would be this digital currency that was backed by fiat currencies with like, this basket that would have a portion of USD, a portion of the euro, a portion of the yen. And, the idea was like, can we legitimize this by bringing it global, but having it tied into all of these different fiat currencies and backed by them, and tied into these very like legitimate financial entities as part of this association. Because of course at the time there was always this criticism of like Bitcoin and crypto in general, that it wasn't real because it wasn't backed by anything and there were no major financial players involved and everything like that. But what happened was that there was a ton of regulatory backlash to this because central banks and lawmakers feared that it could undermine their monetary sovereignty. So kind of like the opposite, I think, of what they expected came down on them, which was the strong arm of the law. And in 2020, they decided, okay, let's rebrand a little bit. They renamed it to Diem. And that basket model of currencies was dropped in favor of single currency stablecoins like a USD-backed Diem. And then
I didn't even know that they. I didn't even know that they renamed it to Diem.
No,
I thought like
nobody talked about it. Like,
because half of that team left, right? And I'm trying to remember the guy's name. It's Marcus. What was his name?
Marcus
Who's leading
Zuckerberg.
it? He was. I'm trying to remember now. He went on to do like a Lightning project after, but a load of that like Libra team went on and like David Marcus. That's it. They went on and did like a load of other kind of cool stuff afterwards. I think some of them joined circles, things like that. So I mean, it was a really cool idea. And, I remember Mark Zuckerberg actually being really pretty vocal about this and involved in the early days. But then, there was all of this scrutiny around the fact that it was part of Meta. Is this an antitrust issue, et cetera, et cetera. So they ended up, rebranding it to Diem, ditching the basket model, going for like this single currency stablecoin approach, which would be like a USD backed Diem. And then they formed a subsidiary called Novi to build a digital wallet for Diem. That I remember. And I remember they were talking about having that embedded wallet. Yeah.
Well, it didn't work out. In 2022, it was shut down because the regulatory pressure never really eased. And Diem's assets were sold to Silvergate Bank for $182 million because Silvergate was planning to launch their own USD-backed stablecoin using Diem's tech. But wait a second, Matt.
Rest in peace.
Isn't that another familiar name?
Oh man, that was such a casualty of the 2023. That was the small banking crisis, man. I'm like, sometimes when we talk about stuff like this, and I'm like, oh yeah, I remember that happened. Like, really, like it feels like a few months ago. This is 2023. And that was when USDC depegged like 10% over the weekend. It was like a crazy moment. I remember I'd only been at Kraken for a short period of time, and I was just like, man, I've just come out of like the FTX blow up and everything after that, and now the whole like crypto banking crisis is like happening as I roll into this new gig. It was one of those other just another day in crypto kind of periods.
Truly. It is wild. I think back to when we first started talking about Libra in like 2018, 2019, and that seems like, okay, not like too far ago. But then I think back to the FTX collapse, and it's like, oh, that was forever ago.
Oh
It's
my God,
almost like
yeah.
there's just so much that's been packed into that timeline from
Yep. Luna
2023.
as well.
Even, yeah, yeah. I mean, we talked about a bunch of them last week. Three Arrows Capital, Luna, Terra, all of these firms that collapsed, and even more so in the wake of FTX. And Silvergate was one of those casualties. So if Silvergate Bank sounds familiar to you, it was one of the crypto banks that collapsed, and there was this fear that, like, could this, spread? We had Silicon Valley Bank. Could this spread to
Yeah.
like the traditional banking system? Nobody wanted to bail out the crypto banks, and the DM tech that Meta sold to Silvergate as a result never saw the light of day because they had to liquidate everything. And
Oh,
then
wow.
back at Meta, in the meantime, the project also officially died. Novi was discontinued, and Meta stepped back from crypto at the time.
Enter the
But
metaverse.
yeah, exactly. Yeah, and that was a whole other roller coaster. But this project isn't that. Meta has
Right.
a new strategy here that doesn't really look anything like Libra or DM, aside from the fact that they're still focusing on stablecoins. But what they're going to do now is plug directly into USDC and USDT and skip the need for a banking partner like Silvergate or a homegrown stablecoin. And thus, this is a lot
Right.
more of a resilient and scalable play. And I think they're probably trying to avoid some of that regulatory friction that they had in the past by just kind of piggybacking on this stuff that's already started to figure it out.
It's just, launching a stable coin is tough. We've been I've been a part of this at Kraken, where we've been a part of a consortium that are behind USDG, and it's like ours, Anchorage, Robinhood, a bunch of others, and we're some of the biggest players in the space, and it's hard because everyone wants to launch a stablecoin. You've also got a couple of real dominant players, right? USDT and USDC. Tether is just going from strength to strength. So like the battle for mind share, having enough liquidity, everything involved in that. I mean, Circle basically manages USDC and is looking like it's going to go public soon. That's a giant business in itself. I think adding that complexity on top of what ultimately it seems like Meta really want, which is just a feature, a use case for stablecoins, it doesn't surprise me that they're backing away from this, for sure.
Yeah. So to your point about what that feature would be, well, if they're able to take crypto wallets and payment rails and embed them into Meta's messaging and social platforms, this is going to give creators a lot more flexibility and global reach to send and receive payments. And I think that this shows a pretty renewed interest at Meta in Web3 infrastructure, but maybe with a little bit more of a cautious and compliance friendly approach. But don't forget, just in case you did, Meta has over 3 billion active users. Okay.
Just a few. That's just a big chunk of the earth.
Yeah. I mean, overnight, this could become the largest crypto onboarding funnel in the world, just out of nowhere. And if you think about it, stablecoins are becoming a pretty de facto global payment rails, especially in markets with, high inflation, weak currencies, poor banking infrastructure. And this battle at the same time for creator monetization is heating up. You've got the likes of TikTok Shop, X payments. Crypto can come in and offer a pretty fast, cheap, and globalized alternative. But let's not forget who we're dealing with here. There is a playbook that Meta has, which is let's copy some proven innovation, but scale it big time through distribution. I mean, this is something that we have seen with them time and time again, with the likes of Instagram stories being copied from Snapchat. And now, that's become more popular in Instagram than Snap's entire app. That happened within 18 months, actually, of them launching Instagram stories. Reels was copied from TikTok, And that now accounts for over 50% of time spent on Instagram. And that's helping Meta to retain younger users, which they were kind of struggling with that for a bit, especially with the core Facebook app. And then now they've, tapped that into Instagram and Facebook feeds. They've got monetization tools. They've got their ad stack. Facebook Marketplace, that was lifted from Craigslist or OfferUp, depending on how you look at it. And, Craigslist kind of had that one coming. Like you look at TikTok and Snapchat, like they weren't resting on their laurels. I think Craigslist probably was. It was like, it became like a meme in the design community of like, wow, look at Craigslist. Like they don't give a shit about UX and they're still just like humming. They haven't changed anything in decades.
If you're in the like marketplace business competing with Craigslist and losing, there couldn't be few things more demoralizing than knowing that your competitor hasn't like done a redesign in like 30 years. It's still kicking your ass. It's just it's just beautiful. I mean, Reddit, albeit like not since the IPO, but pre-IPO, it's a similar story in many cases. But
but the thing is, Matt, like Facebook Marketplace, that is one of the most visited product listing sites globally. And
my mom loves it.
I love it. I mean, I use the thing. That's probably the only reason that I have a Facebook account is that, and then some groups. And from what I understand, like Marketplace is from a usage perspective, it's a big deal. You've also got shops on Facebook and Instagram. They basically copied Shopify UX, and now they compete directly with e-commerce platforms. Maybe a little bit more recently, something to think about is Threads, which was kind of ripping off Twitter or X. And they did get 100 million signups in 5 days. That was the fastest growing app in history at their launch. It's still being... Yeah.
But then again, this is the thing. Meta actually rarely miss. You operate at that kind of level, you're going to miss on certain things. There's been plenty of that. They rarely miss. And I think what they do very well is, like you say, take something with product market fit, make it accessible to either a new demographic or make it accessible in a more intuitive way that just like rips through and gets powered by their distribution engine. And this is a great example. I mean, when you look at the state of the crypto industry today, I don't actually think it's particularly controversial for me to say that there's probably two products today that have true product market fit, whether people like it or not: centralized exchanges and stablecoins. And I don't think anything else has true product market fit. You could argue that decentralized exchanges do, but when, looking at some of that outside of maybe Uniswap, it's hard to make a case for that. So Meta coming in and saying, okay, well, here is a proven use case. It's got PMF. It's rapidly scaling. Major financial institutions are adopting it. Banks are integrating with it. You look at what Stripe have been doing over the past 12 months, actually, and it's becoming more and more integrated. This feels like the next step in, and I think it can be very complementary into the wider ecosystem that Meta will bring, and I also imagine will be very good from a global growth perspective, just because the lack of friction in stablecoins in general. So I am very interested to see what they do. I think it's more likely it's a hit than a miss.
I think so too. I think it's likely to work. You look at like WeChat, for example, and the payment infrastructure that has and how successful that is with peer-to-peer payments, and WhatsApp is the Western version of that. And that doesn't even begin to touch on payment facilitation between creators and consumers in apps like Facebook and Instagram, facilitating payments on the marketplace, like we were just talking about. And I think that more than anything for us, this is a reminder that the most disruptive stablecoin play, or in some cases, crypto play, may not come from a crypto native company, but rather from a Web2 giant that is operating at incredible scale that can integrate crypto under the hood and roll it out to all of the normies overnight. And really, like, further implication here, as we're talking about payments and facilitating P2P, if they successfully roll this out at scale, it could pressure Apple and Google to address some of their in-app payment monopolies, which has some broader implications for the app economy.
I think that's one of my things here that I'm most excited about is like, okay, I think one, for many countries around the world, maybe less so for Europe and the US and Canada, but especially, which you will know very well, in Latin America, places like Brazil, if you're many individuals there, the first kind of aha moment they had with crypto is actually stablecoins. It's like an incredible way to get your first experience of like how much better this can be, and I think that is a great way to then give people the on ramp into crypto and the wider crypto ecosystem from there. The more we see adoption with Meta, is great. They reach all of their user base, et cetera, but to your point, the more Meta have, like Google and Apple, time and time again, created and defined user behavior and patterns that the rest of the app ecosystem just then has to conform to, right? Like we look at things like Apple Pay, like it's, people have grown so accustomed to using digital wallets, right, in the form of like Apple Pay, that other companies, merchant side or like retail side, they can't not afford to like integrate with this stuff. And I think this is another step towards this, that we're going to see these patterns exist where it becomes an expectation that crypto stable coins in particular are an option. It's not going to happen overnight, but this is the way I think this starts.
Yeah, it'll be interesting. I want to see how these features actually start to show up in the app.
Yeah, I'm excited. Well, it's all very positive. We've got a lot of positive news, I think, despite whatever happens over the next few weeks in the markets. Things are, one, gaining some solid momentum. I think we're starting to dampen some of the insane volatility that we're having from a fiscal and monetary perspective. I think we'll go back into periods like that, but a lot of positive moves and innovation that's happening on the crypto side. So I expect that the next kind of 6 months, we'll probably see some big moments that happen that are not just to do with price action as well. So, Of course, we'll be covering all of that on the podcast. All right, Austin, as always, I'll see you next time.
Talk to you then, Matt.